Aster went from zero to overtaking Hyperliquid in daily perp volume in less than a few days. There's a new bully on the DEX block, and it's beginning to beat the dominant player that's owned this space for months. Something fundamental is shifting in this market. Today, I'm walking through what Aster actually is, why it matters for the perp DEX landscape, and how I am personally positioning around this major shift. As usual, I'm not giving you any financial advices here, and I encourage you to do your own research. Decentralized perpetuals have been a one race horse for months. Hyperliquid built a custom layer 1, dominated volume, and basically wrote the playbook for on-chain derivatives. But in September, something changed. Aster launched with a bang, and traders moved over in waves. But what's the hype about? What does Aster bring to the table? Well, let's start with the fact that Aster runs as a multi-chain perp DEX with a strong foothold on BNB chain. It offers both spot and derivatives with high leverage options, and I really mean high, up to 1001x leverage. The interesting part is how the DEX is structured. There are two interfaces. The simple mode strips away the complexity. One-click trading with built-in MEV resistance for people who just want to get positions on without worrying about getting front run. And then there's the Pro mode. It gives you the full order book experience. Hidden orders, advanced charting, grid tools, and basically everything a serious trader expects from a professional terminal. That dual approach matters to me because it captures beginners and retains power users. You onboard in simple, then graduate to pro as you level up, and the platform seems to be growing with you. But how did Aster come about in the first place? Well, it's the result of a strategic merge. Apex Finance and Asterus combined their tech stacks and communities instead of starting from scratch. That gave them momentum out of the gate rather than the typical slow build most new DEXs face. Let's get specific about what's actually happening with some real numbers though. Aster just got launched, and yet over the past 7 days, it has recorded over $220 billion in perps volume. That's almost 3 times more than Hyperliquid's $80 billion. Another important point, Aster's total value locked hit above $2.27 billion as traders and liquidity providers moved capital over from competing platforms to Aster. The metrics are climbing across the board, which tells me this isn't just launch hype fading after week 1. But now I'm about to tell you why the Hyperliquid comparison matters. Hyperliquid has been the clear leader in decentralized perps. Purpose-built layer 1, sub-second finality, institutional grade execution. For months, nothing came close, guys. However, Aster forced a real competitive dynamic. And that shift changes how I think about my portfolio exposure in this DEX category. But more on that a bit later. Hyperliquid optimized for performance through vertical integration. On the other hand, Aster took a different path. Multi-chain expansion, token-driven growth, and a huge number of features. Both strategies can work, and right now, traders are splitting capital between them based on where execution feels best in the very moment. This rivalry matters because competition drives both sides to ship faster, improve features, and compress costs. And that benefits all of us who trade on-chain derivatives. Now, what makes Aster such a strong competitor in the DEX space, and within such a short time at that too? Hidden orders. This stands out immediately. Imagine you're a whale who places several huge orders in a row. Well, your orders stay invisible until they fill. This matters a lot because you don't want to telegraph your positions to the market or expose yourself to predatory MEV. Then there's something unexpected. Stock perpetuals. Aster lists equity perps for names like Apple and Tesla, bridging TradFi speculation into crypto rails. If that catches on, it expands the addressable market beyond the typical crypto cycles. For traders who want 24/7 equity exposure without leaving the on-chain ecosystem, that's a genuine value add. Aster didn't just launch with good tech, to be honest. It launched with serious backing. BNB Chain provided huge support. On top of that, YZ Labs, formerly known as Binance Labs, offered strategic guidance. Not to forget that CoinMarketCap ran a CMC launch campaign that drove massive exposure too. According to CMC's own data, that campaign generated hundreds of millions of impressions and millions of clicks. Distribution most projects never really access. But here's what really changed the game. CZ himself got directly involved. Here's his role in his own words.
And also, I'm an advisor for Aster, and I specifically carve out. I only advise them on product and tech, and I do not advise them on regulatory issues.
The former Binance CEO also confirmed that former Binance employees are part of Aster's core team, with YZ Labs holding a minority stake in the project. But this is where the story gets absolutely fascinating, with CZ playing master of the dark arts again. Well, Aster isn't just competing with the leader, they're systematically trying to destroy Hyperliquid. They are using the exact same playbook CZ used to take down FTX. Remember how he dumped FTX token and exposed their weaknesses? It seems that Aster are doing something similar here, but way more sophisticated. First, they listed the HYPE token with 300x leverage, the highest leverage available on the platform for any token. Well, that's not a coincidence. They are basically giving us traders a weapon to short Hyperliquid's own token on their platform. Second, the timing is perfect. Hyperliquid has a major token unlock coming where they are releasing more HYPE tokens to the market. Aster launched just 2 months before this unlock, and that gives traders an alternative right when selling pressure is about to hit Hyperliquid. But here's the most genius part. While Hyperliquid is focused on being a technical masterpiece with perfect order execution, Aster is everything to everyone. That's what they're aiming for. Multi-chain support, stock trading, insane leverage, hidden orders, yield-bearing collateral. They are basically saying, why choose when you can have it all? Let's talk a bit about the Aster token. It has roughly 1.67 billion in circulation out of a total supply of around 8 billion. And 53.5% of the total 8 billion will be allocated to airdrops and rewards, our favorite. For a step-by-step guide on how to farm the airdrop, visit the airdrops.com website and search for Aster. I will also leave a link in the description below. Speaking of the Aster token, the price action has been absolutely spectacular. Aster launched and within 2 weeks pumped over 2,000%, reaching a peak market cap above $3.8 billion before settling around $3.1 billion. The token went from 0 to ranking 36th on CoinMarketcap with over 113,000 holders in less than 2 weeks, as I said. This isn't just retail FOMO, guys. We are seeing whale wallets accumulating hundreds of millions in tokens. Even Mr. Beast invested more than $1 million and continues buying despite the volatility. But there's a risk here worth flagging. Top holder concentration is significant. Some wallets control meaningful supply, which creates potential for coordinated moves and headline risk if large holders decide to exit. That structural risk is common in new tokens, I agree, but it's real and demands careful sizing. Right now, Aster leads in attention, leads in volume on multiple days, and leads the narrative. Markets reward that combination when the underlying product also delivers. The question is sustainability. Does volume stay sticky? Do users keep coming back after incentives normalize? That's what separates momentum plays from durable winners. I'm watching whether Aster maintains their top 2 daily perp volume over rolling weekly windows, because consistency matters more than just one-off spikes. Competitively, Aster has accelerated the entire segment's evolution. That pressure alone can sustain a multi-week or multi-month run as both platforms, Hyperliquid and Aster, iterate faster. Given how rapidly the competitive landscape shifted, last Friday I scaled down my position in Hyperliquid by about 30%. The logic is straightforward. Staying 100% concentrated in one exchange token when another is winning days on volume and mindshare introduces unnecessary risk. This isn't about abandoning Hyperliquid altogether or going all in on Aster. It's about reflecting the current competitive reality in my portfolio construction. If the data changes and leadership flips back, I will adjust again. The only rule is following the flow, not the narrative. Now, here are the 3 metrics that I will monitor in the next few weeks, even in the next few months. First is volume consistency. Does Aster hold top 2 daily perps volume over consecutive weeks, or does it fade after the launch window? Then I pay attention to the TVL composition. How much of the locked value is mercenary hot money versus sticky capital from real, long-term oriented users? And third, the revenue mechanics. When and how do fees flow back to token holders or liquidity providers? That drives long-term demand beyond pure momentum. If those boxes, the 3 of them, check out, then the thesis strengthens significantly. If they don't, then my Aster position gets trimmed. Now let's talk a bit about the risks on the table. Top holder concentration remains the primary structural risk. It creates headline vulnerability and potential coordinated sell pressure. Short-term volatility is extreme too. Influencers and whales can swing price rapidly, which makes risk management non-negotiable really. Regulatory scrutiny is also an unknown variable, especially around equity-like products. Stock perps could draw attention that complicates operations. And the bear case, if volume proves mercenary and incentives rotate elsewhere, leadership can snap back to incumbents or fragment across chains quickly. I want to zoom out a bit and look at the bigger picture. Hyperliquid still has world-class infrastructure, a custom layer 1 and a massive embedded user base. Don't count them out, guys. This will likely stay a 2-platform race for the foreseeable future at least, with both gaining share from centralized venues and weaker decentralized exchanges. If Hyperliquid responds with new features or execution improvements, the leaderboard can flip again. In our case, as traders and investors, staying nimble matters more than picking a side. Aster's tactics are aggressive, I agree. High leverage listings, hidden orders, MEV protection, and multi-chain accessibility. That package is engineered to pull sophisticated capital that wants both stealth and throughput. And in my view, there are 3 possible scenarios going forward. First, the base case scenario where Aster and Hyperliquid trade leadership back and forth while iterating, both capturing share from centralized competitors. Then, the equally likely bull case, where Aster locks in sustained volume leadership, formalizes value distribution, and converts momentum into actual cash flow fundamentals. And finally, the bear case. Volume proves mercenary, incentives shift, and leadership reverts back to incumbents or fragments. Current data, in my opinion, supports base to bull case scenario, but markets move fast and positioning needs to stay flexible. In conclusion, I think Aster represents a massive, legitimate competitive challenge to Hyperliquid's dominance in the decentralized perp sector, which is backed by rapid growth in open interest, total value locked, and daily volume. But I also wonder, what do you think? Will the Aster shenanigans manage to sink Hyperliquid for good? Let me know in the comments below, please. For now, I personally have scaled down a bit on my exposure to Hype, because that's the more sensible approach from a risk management point of view. But ultimately, I'm convinced this new DEX rivalry will benefit traders through faster innovation and better execution across platforms. As always, the job is following the data and adjusting accordingly when it changes. If this breakdown, guys, was useful to you, then drop me a like to support this video. Subscribe to the airdrops.com channel and catch my updates on the DEX wars and the hottest topics in crypto. So, follow the data, not the hype. I'm Stan, and I thank you for watching. See ya.